Tinubu tax begins. Who pays? How much? Who is exempt? And compliance rules. Have you been hearing people talk about a Tinubu tax and wondering what it really means? Designed to overhaul how taxes are collected, administered, and reported across the country. So when people refer to the Tinubu tax, they're talking about this comprehensive tax reform regime, not a single new tax, but a major update to Nigeria's tax system that affects individuals, businesses, and financial reporting. A key aspect of the reform is the introduction of a modernized tax administration framework meant to expand the tax base, improve compliance, and bring more transparency to how taxes are collected in Nigeria. It's a structural fiscal change, something officials say is meant to strengthen the economy and broaden revenue sources, not just raise rates arbitrarily. Another part of this change involves how banks and tax authorities work together to identify and monitor taxable income, including things like linking tax identification number (TINs) with bank accounts for income earning activities. We'll explain exactly how that works later, so you are not left confused. Yes, the new tax laws have begun as of January 1st, 2026. We'll go beyond the headline and answer the bigger questions Nigerians want to know, like who actually pays tax, who is exempt, how much tax is due at different income levels, and what compliance requirements meant for your bank accounts and business. So the question is, who actually pays under the new Tinubu tax? This is what most Nigerians are asking right now. Let's make it clear. Anyone earning below 800,000 naira per year is exempt from personal income tax. This protects low-income earners and ensures most Nigerians will not pay additional tax. Workers earning above 800,000 naira annually are subject to progressive tax brackets, meaning high income is taxed at higher rates. For example, if you earn 1.2 million naira a year, only the portion above 800,000 naira is taxed. The exact percentage depends on the bracket you fall into. Government workers, private employees, and freelancers who earn above the threshold are all included. There is no exemption based on employment type. What matters is your taxable income. Small businesses with annual turnover below 50 million naira are generally exempt from corporate income tax. Informal earners or freelancers who make taxable profits above the exemption thresholds are now included in the tax net. This is part of the government's push to formalize the economy. Who will not be taxed? Well, this will be individuals earning below the 800,000 naira threshold, students, dependents, and people with no taxable income. Very small businesses under the turnover threshold. This clears the misconception that everyone suddenly pays a new tax. The law specifically targets those with sufficient income or corporate profits. Well, banks now require tax identification number, known as a TIN, for taxable account holders. Accounts are not automatically debited if you don't have a TIN. The requirement is for compliance tracking, not seizure. Your NIN can serve as a temporary linked identifier until you get a formal TIN. Now, for anyone earning more than 800,000 naira per year, the law uses progressive tax brackets. This just means the more you earn, the higher the tax rate for the portion of your income above the threshold. Let's go through some simple examples so it's crystal clear. Example 1 for a moderate earner. Say your annual income is 1.2 million naira. The first step to calculate it is to subtract the tax-free threshold. That is, having 1.2 million naira minus 800,000 naira to give 400,000 naira. The next step is to apply the tax rate, which is 15% for this bracket. That will mean multiplying 400,000 naira times the percentage to give 60,000 naira, which will be the taxable amount. So someone earning 1.2 million naira per year pays 60,000 naira in tax. Notice that you don't pay 15% on your whole income, only the amount above 800,000 naira. Let's take another example. An example for a higher earner. Let's say your annual income is 6 million naira. To calculate, we subtract the tax-free threshold. That will be 6 million naira minus 800,000 naira to give 5.2 million naira. Next step is to apply the progressive tax rates. First portion of 5.2 million naira might be taxed at 15%, next portion at 20%, and the highest portion at 25%, depending on official brackets. Next step is to calculate the approximate total tax. That will be around 780,000 naira to 1 million naira per year for that amount. So someone earning 6 million naira pays significantly more than a person earning 1.2 million naira. Notice how it scales up progressively. Small businesses with annual turnover below 50 million naira are exempt from corporate income tax. Larger companies and high revenue businesses are now more closely tracked. They pay based on their profit, turnover and minimum tax rules. The VAT and withholding taxes are also affected, mostly impacting businesses and high-income earners, not ordinary low-income Nigerians. Now let's clear some myths about the tax. Some people are worried the government will automatically take money if you haven't paid tax. This is false. So now that we know who pays and how much, the next question is, what do you need to do to comply? And what are the rules about banks and TINs? If you are a taxable Nigerian or business, you must have a tax identification number, known as a TIN, starting from January 1st, 2026. Banks are required to request your TIN when opening accounts. This does not mean that your money will be automatically taken. For those who do not have a TIN, your National Identification Number (NIN) can serve temporarily as a linked identifier until you register. Bank reporting of accounts. Bank will report accounts with higher turnover, such as transactions above 25 million per quarter, to the tax authorities. This is for monitoring and compliance, not automatic freeze or debit of your account. Ordinary accounts below these thresholds are not subject to the reporting. Filing and penalties. If you are taxable, you are expected to register, file returns, and pay taxes on time. Penalties exist for late filing, failure to register, or non-compliance, including fines and interest. But for most Nigerians earning below 800,000 per year, there is nothing to file or pay. Controversies and clarifications. Some critics have raised concern about differences between the gazetted law and the harmonized version, causing confusion. Well, on this, the government insists implementation will proceed as planned and says the reforms are designed to be fair, transparent, and easy to follow. Now, what does this mean for you? Check out to make sure you have the TIN. If you don't have one, register it. And finally, it is important to clarify that low-income earners, students, dependents, and small businesses under the threshold are mostly unaffected. Compliance is simple: registration, filing, and paying taxes if you are above the threshold. There is no automatic debit from accounts.